Hello, and welcome to the 2024 BARS update for GAAP basis governments. On our agenda today are general BARS updates, some small online filing updates, and information on our project pages. Let's begin with our general BARS updates. Beginning with our accounting updates, our first update is to 3.1.1 Fund Types and Accounting Principles. If you have ever visited this page, you know that it's long and it can be difficult to find what you are looking for. To solve this problem, we are separating out the two topics. Accounting principles will be 3.1.10 and fund types will be 3.1.1. Our next update is for 3.3.10, capital assets. In this section, we have clarified that costs related to acquisition or construction of a capital asset should be capitalized. If costs relate to more than one project, they should be allocated to those projects or assets. For governments that have special assessments, we have updated 3.2.7 special assessments, which include clarification on reporting for capital assessments, that both modified and full accrual accounting recognize the receivable when the assessment is levied. Only governmental funds report a deferred inflow for amounts not collected within the availability period. Proprietary funds and government-wide statements recognize all revenue when the assessment is levied. We do have some updates to leases, SPEDA, and 3Ps. We have clarified accounting for rate increases. If the rate increases are known, it is included in the liability since it can be calculated. Examples of fixed rate increases are contracts that say payments will increase by $2,000 per year, or perhaps it says by 3% per year. On the other hand, if the increase is variable, then it should not be included in the calculations. Non-lease payments such as taxes, maintenance costs, charges per mile, or charges per copy should not be included either. For 3.4.3 bond revenue warrants, the RCWs from this page have now been repealed. Therefore, we will be removing this page. We are also adding section 3.4.11, local program. This is showing how to account for the state treasurer's local program, which is reported like normal debt. Next up is 3.6.10, working advances from DSHS. Since working advances are loans, specifically intergovernmental loans, we will be moving this section to 3.4.7, intergovernmental and forgivable loans. In 3.8.1, unemployment and deferred compensation, and 4.8.9, Schedule 21, we have clarified that assuming a risk, not setting aside resources for future claims, is not self-insurance. What does this mean? If your risk management is to pay claims or benefits as they come up without setting aside resources, then you are assuming a risk and not self-insuring. In 3.8.12, election costs, since the Secretary of State has the authority over the allocation of election costs, we will be removing that specific guidance from the page and directing everyone to the Secretary of State's guide. We will still have the BARS codes and accounting guidance in the manual. Moving on to 3.9.5, overhead cost allocation, we have removed the non-authoritative examples and added additional clarifications. As always, we have made some minor updates and clarifications to several BARS codes and BARS pages to address common questions. Moving on to reporting, Note 1, Summary of Significant Accounting Policies. We have updated and added information on SPIDAs, deferred inflows and outflows, fund balance, and some other minor clarifications and adjustments. We are adding Note X, certain risk disclosures. This is a new disclosure which is required when all the following are met. A concentration or constraint is known prior to when financials are issued. The government is vulnerable to the risk of a substantial impact, and an event that could cause a substantial impact has occurred or has begun to occur within 12 months of the financial statement issuance. An example of what could trigger this disclosure would be something like a city has a large military base that is a significant source of revenue. The city learns that the base will be closing within 12 months. This would cause the city to lose a significant amount of revenue. With this update, there would be a new disclosure that would describe the concentration or constraint. In our example, that would be the military base, since it is a significant concentration of revenue. The event in our example is that this base is closing. And finally, we would also disclose any actions taken by the government to mitigate this risk. Moving on to BARS codes, we have a new series. It is the 345 series for economic development. This series should be used to report proceeds from charges for goods and services, specifically related to the economic development function of the government. 34551 is for charges and fees for promoting and retaining local businesses and jobs. 34552 is for charges and fees collected for the purpose of promoting tourism and supporting existing tourism activities. We want to clarify that this code does not replace the existing 313 hotel motel tax codes. Only use this code if you are collecting additional monies related to tourism services. 34559 is for charges and fees increasing economic development, not directly associated with business and job growth or tourism. We also have a new tax code, which is 31846, Business Payroll Excise Tax. A payroll excise tax is imposed by cities for the privilege of operating a business in the city. This tax revenue and the allowable expenditures should be included in the city's municipal code. We have also added a new liability code, 26313, self-insurance and risk pool claims liabilities. This is for self-insurance and risk pool claims liabilities such as open claims, incurred but not reported, and unallocated loss adjustment expense. Governments with self-insurance programs should only report a claims liability on the Schedule 09 if they have an actuarially determined liability. We have some minor annual filing system reminders and updates. As a reminder, as a government, you can unlock your annual report up until the audit is complete. Unlocking is super easy. All you need to do is click the blue unlock icon. If you have a gray icon, then you need to contact your audit team to have the report unlocked. If you just need to view the report, you can click anywhere in the dashboard other than the unlock icon. We have some minor updates to the annual filing system. For the Schedule O1, we have added the ability to export a list of all required and warning errors. On the Schedule O9, we have added a new question regarding audit deadlines for bonds to make sure that our office can work with you on meeting those deadlines. We have also changed the display of variances as official warning errors. On the Schedule 16, the other award ID is required for all indirect awards and optional for direct awards. We have multiple new changes coming in 2024, including accounting changes in error corrections, along with compensated absences. We do have detailed trainings on these changes on our coming in fiscal year 2024 project page, which can be accessed by scanning the QR code on your screen. We do recommend that governments review these trainings since this is the year of implementation for these accounting standards. Thank you for joining me today for the 2024 BARS update for GAAP basis governments. If you have any questions, please feel free to submit a help desk.